KPIT Technologies is the next company that we are speaking with, and it reported a good set of first quarter numbers. We have seen steady deal wins in the first quarter, but US business is under pressure. And sort of coming straight off after speaking with, Sona, Mr. Sachin Tikekar is President and Joint MD at KPIT Tech. He's with us. Sachin, great to have you with us here. Good morning, Prashant this side. You're also highlighting that there is certain pressures in the mobility segment on demand and profitability fronts. Is the pressure only in the US? Because Europe and Asia have done well for you. Just characterize the demand environment for you.
All right. Good morning, and thanks for having me. Just across, you've seen the growth has been robust, and we've had it's been 16 consecutive quarters of growth for KPIT, profitable growth. The growth is driven by Asia, as you can see, and we think that Asia will lead the growth in next few years to come, and followed closely by Europe. As far as the US is concerned, there have been 3 or 4 things that we are dealing with. One is some of the US-based OEMs have been acquired by some of the others, a couple of car makers, one of the truck makers, and that business for us has shifted from US to another geography. That's point number 1. Point number 2 is there are only a handful of passenger car OEMs in the US that we can work with, and that's been our primary growth driver over the last few years. And there are a whole bunch of them on the what you call new mobility players on the West Coast. They're not quite part of our T25, the core accounts. So we sort of work with them, but there are no deep relationships with them. So these are some of the things that we have dealt with over the last year or two, and that's why you've seen the growth is a little bit less in US as compared to the other geographies. Having said that, we think that the growth will come back in the US in the next year or two, starting this year, actually, in the second half of this year. There are 2 reasons for that. One is we see more and more global OEMs investing in US because US somewhat is protected from the competition from the Chinese OEMs with 100% tariffs on the Chinese OEMs. So we believe that the Koreans, the Japanese, and the Europeans will double down on US because it's sort of a cocoon for them, and that sort of gives us an opportunity to work with them in the US. That's point number 1. Point number 2, we've been looking at off-highway as an adjacency for the last several months, and we've started to make investments in off-highway. And there are 3 or 4 big off-highway OEMs who are based out of US. As we build up the off-highway segment, we believe that we'll see a little more growth coming from the US. So overall, we hope to have a little more balanced growth as we get into the second half of this financial year.
Okay, all right. Hi, Sachin. Yeah. Hi, Sachin. First of all, good morning, and thanks a lot for joining in. And congratulations. On a quarter-to-quarter basis, you'll keep surprising the street, valuations aside, but the delivery has been rather good. Let's focus on 2 markets. One is the US market, which has been growing in low single digits, and there is a bit of a worry. Even last night, you had Tesla's vehicle sales numbers were lower. So could you tell us, from this $44 to $47 million per quarter, how do you see it shaping up? By when do you think you can go closer to around the $50 million per quarter for the US markets? And Asia has been growing very, very well. Which markets do you cater to in Asia? Because the revenues there have doubled in the last 5 quarters.
Absolutely. Let me take the questions one by one. Let's talk about the US. As I mentioned earlier on, we do hope, because more and more of our global OEMs who are investing more in the US, we think that our engagements with them will grow. That's one reason. Secondly is the off-highway part that will start to kick in in the second half of the year. However, we'll see substantial growth coming in over the next 2 or 3 years, because it does take time to build and sort of create leadership in a new adjacency like off-highway, from passenger cars or trucks for that matter. So to answer your question, we think that the growth rate will increase in the US from the second half of this year. And we think that next year we're going to see a little more balanced growth as compared to what we'll see this year. And that's when we'll get close to the 50 million run rate that you actually talked about and more. As far as the Asia part is concerned, our primary, the biggest part of our business today comes from Japan. There are a couple of OEMs that we work with in Japan, and that's complemented by Korea and India. There is an added focus from KPIT side on China. So we do hope that China for China and China for the globe will start to kick in for KPIT towards the end of this year. We also see that some of our OEMs who have been manufacturing vehicles in Thailand, but have not done much work in terms of design and engineering in Thailand. So that's why we have not engaged with them in Thailand. But as a hedging, they may do more of design and engineering work in Thailand. Again, our global T25 OEMs who have presence in Thailand. So we think that Thailand can also become sort of an important country for us as we look at Asia holistically.
Just one final question then. What is the deal win run rate? I think in FY24 it was about $800 million. What is the run rate currently? And any big deals in the pipeline which are likely to convert over the next, say, 6 to 12 months?
Yes, we keep working. And the way we look at big, large, long-term engagements is slightly different. You know, over the last couple of years, we made some big announcements with, 3 OEMs. However, not all the OEMs like to go out and make such announcements. That's point number one. And point number two, when you establish a long-term strategic partnership with an OEM, the business just flows in every month, every quarter, every year. And there is, it's kind of hard to put it in one bucket and say it's kind of a large deal. But if you look at all of our diamond accounts and platinum accounts, the growth has been substantial in each one of them. So we do expect that our existing clients will continue to give us more than 85% of the growth in future. Having said that, to answer your question directly, there are a couple of OEMs in the US. There is one in Europe, and then there are 2 in Asia. There are about 5 of them who are our existing clients, but the relationship is not that of strategic partnership yet. We believe that at least 3 of them will be able to start something meaningful with them before the end of the year. So the pipeline that we have currently is enough for us to make sure that we stay well within the guidance that we have given in terms of our top line and bottom line, which is 18 to 22% year-on-year growth for this financial year. And as we get deeper into the year, we do hope that the pipeline continues to build up from where it is today. And, that will create growth opportunities for us as we get into the next financial year.
Mr. Tikekar, great conversation as always, and appreciate you joining us here on CNBC TV18. I'm sure your investors are taking heed as you sort of continue to work to deepen some of those relationships into to being more strategic for you all along.